Welcome everyone to the CFO Swinger Watch newsletter's technical analysis video for the week of May 6th through 10th. With that, let's start off with the markets. Now, you guys may have noticed that this video is slightly shorter than the other technical analysis videos from the previous weeks. And the reason being is that I give you guys a complete structured market summary / breakdown, and I give you guys a bullish and bearish perspective on the markets and the overall markets. And I give you guys my own personal conclusion based on those two different polarized perspectives. And I need you guys to read that first before you watch this video. So make sure you guys pause this video if you guys haven't read the newsletter yet, and then go back to the actual PDF. All right, so with that being said, the S&P 500, as we have here, as usual, or ticker symbol SPY, is at a major inflection point. In fact, all the other indices that we have been looking at, like NASDAQ or the Russell 2000, are all at their major inflection points. Now, what is this specific significant inflection point? Well, it's quite literally a moving average. And that specific moving average for me is the daily 50 SMA. This dark blue line here that I'm pointing with my mouse cursor. Now, last Friday, we were able to officially retest this daily 50 SMA after breaking below it on April 15th, on this specific week, where we also had 6 consecutive red candlesticks to the downside. And they were all backed up by some very large selling volume. And so with this initial first retest of this daily 50 SMA, I would want to assume that this SMA is acting as an area of resistance. And obviously before that, it was acting as a large area of support and obviously a long-term area of support. And this daily 50 SMA has also allowed the price to jump upwards. And again, if you guys remember, I told you guys that whenever the price reacts to, well, first of all, retests and then reacts to a major long-term SMA, we tend to overextend that quote-unquote retesting price action, and we tend to jump up a little bit higher and over that major SMA, and that's exactly what we did. And in this specific case here, in this instance, we were able to retest this major whole number level of $512. And you might be wondering and asking yourself, that whole number level sounds pretty familiar. Well, it is familiar because last Sunday, I told you guys to hone in on this level, and there's a possibility for us to retest this level while at the same time, we can see a coinciding retest of the daily 50 SMA. And if you go back to the weekly time frame, this is where this 512 whole number level was born. So the weekly 10 SMA last week was flatlining at this 512 whole number level. And so we got a perfect weekly high at this weekly 10 SMA retest, and we were able to simultaneously retest this 512 whole number level. And so this alone, this level alone, and this weekly 10 SMA alone is an inflection point as well on a larger time frame compared to the daily time frame, which in itself is a higher time frame. And so we are quite literally right now stacking these inflection points for the S&P 500. Now, with that in mind, you guys also have to remember that we are still within the parameters set up by this potential bear flag, these two ascending trend lines, this ascending resistance trend line and this ascending support trend line. And if you guys want to take a look at this from a macro perspective, we are also potentially seeing an inverted cup and handle. That's right. This is an inverted cup, which is right here that I've just hastily drawn here, okay? And then the handle will be this descending channel. And remember, it's descending because it's inverted, all right? So I believe I can actually invert this There we go. So I have completely flipped this chart here. And so what we have is a typical cup and handle chart pattern, which is bullish. But in this case, since we are inverted, right, the price should be breaking to the upside, right? And that's the reason why we have a descending channel for the handle part of the cup and handle. But then again, we go back to the normal reality of things. What we have here is an inverted cup and handle chart pattern, which is now inherently bearish, right? Because originally a cup and handle is bullish. So with that out of the way, this little area here is going to be pretty troublesome for me personally, because I am still biased to the downside. And potentially, I might even have to raise my floor here, which is the reason why I have changed my little statement that I've been making here, or this question that I've been making for the past couple of months, that we could potentially be seeing a pullback to 477.50 right here. And remember, this is the level that we're looking at because it's also the previous all-time high level that we saw back in late 2021 to early 2022. And also, it aligns with that textbook pullback percentage range of 5 to 10%, as it lies at 9% or negative 9% from the current all-time high. So here's a little visual here, right? 9% right there at 477.50. So here's the thing. If we continue to move sideways right underneath this daily 50 SMA, I may just have to lift my floor up higher and just decide that, hey, the market may just be giving us a quite tame pullback where we don't see a very deep move to the downside, So this 490.50 also works out pretty well since it is a pretty significant daily level of support that we saw back in mostly around early February to mid-February. Now, this would also mean that we would have to break below the current low that we saw during this initial pullback, which was set on April 19th at the lows of 493.86. And so from current levels here, or the previous closed price, we would have to move down another 4% in order to hit this 490.50 whole number level. And so keep this in mind, because if we do reach this level and if we do see a nice pivot, then this could potentially be our official floor for this nice pullback of, if we trace it from the all-time highs, of about 6.50%, which is still within the parameters of a textbook pullback. All right. Now, one last thing, I want to point out that the volume from last Friday finally gave us a small uptick in the buying volume, where we're actually seeing the volume being a little bit over the average daily volume. So last Friday, we had a daily volume of 72.75 million, while the average daily volume was at 72 million. So it's not a lot, but it's still telling us that there is a slight uptick in the buying of the markets here. And so for SPY, this is exactly what I'm looking at for this week, for this potential inverted cup and handle that could potentially work out, or just this simple bear flag. But I'm still making sure that I am looking at the volume bar, since last Friday we got this slight uptick in the buying volume. All right, now last but not least, we have the daily 10 and daily 21 SMAs, and my daily 10 is curling up higher. However, we have this massive gap up that we have yet to fill. And again, we're at a crucial inflection pivotal point at this daily 50 SMA and this 512 whole number level. So this is going to be pretty interesting, because we can see either an initial pullback where we can fill this gap first, which will also allow the price to retest the daily 21 SMA, which we ultimately didn't do last Friday, which was disappointing. And then we can also see a retest of the daily 10 SMA. And at that point, I would probably see the daily 10 crossing over the daily 21 SMA, officially giving us that short-term uptrend back in our hands, and I would officially have to give up my bearish perspective in the markets. All right, so that's it for the S&P 500. Make sure you guys read the newsletter first before you guys watch the rest of this video. All right, now for NASDAQ, I also want to give you guys this brief look at this inverted cup and handle. So what we have here is the cup, okay, and we have our little bear flag, but also is a part of this inverted cup and handle. All right, so if you guys couldn't see this, here it is. Here's my very crude drawing of this inverted cup and handle, as I promised from the newsletter. Okay, all right, so with that, let's take a look at our first ticker of this week. Okay, WB. Okay, so weibo. All right, I'm pretty sure it's pronounced weibo. I know people like to say weibo, but it is weibo. But WB here is a Chinese social media company, sort of like, let's say, Twitter, the Twitter of China. I don't know if that's really true, but this is considered the Twitter of China. And this ticker is looking rather interesting. And before I take a look at the daily time frame, let's take a look at the weekly. So the weekly has arrived at a pretty pivotal spot as well, because we are at the all-time lows, and the all-time low level is roughly around $7.83, or around $7.85. If you guys want to keep it, at a familiar, quote-unquote familiar numbers, with that 5. So this $7.85 all-time low level has ultimately caused a double bottom chart pattern to play out on the weekly time frame. And so far, we have been able to see a nice move back to the upside as we made the second bottom right over here. So again, the first bottom is to the left and the second bottom is to the right. Now, on top of all of this, okay, we had this macro descending resistance trend line that we've been making during this huge pile drive lower into all-time lows. And last Friday and last week, we were able to jump to the upside and officially break over this descending resistance trend line. And we are ultimately able to close over this descending resistance trend line. However, we are not done yet, because this double bottom chart pattern also has a neckline. Okay, there's a neckline here at exactly $10. This whole number level, this psychological golden whole number level, that is also the double-digit share price number. It's sort of like the triple-digit share price number of 100. So treat this as a level like that triple-digit number, since this ticker is a single-digit stock. And I basically, personally, I consider this a penny stock whenever we see stocks that are below that double-digit share price, or I guess threshold. So with this neckline here, we have yet to see a confirmed break to the upside on the longer term. Hence, my first and only confirmed entry point over $10, or sitting at $10.05 for that confirmation. Now, obviously, if you guys just want to have a simple entry point over last week's highs, which was at $9.78, then $9.80 will be a perfect and quick entry point for a long position. Now, here's the thing, okay? Last week's highs was also at a previous pivot area. So if you take a look at every single one of these weekly candlesticks that I'm pointing out right now, okay, so again, this one, this one, this one, and then this one, and this one, we have seen immediate rejections back to the downside. And this is the first official candlestick where we are able to come back over it, break over this descending resistance trend line, and close at the highs of this specific pivot area, or specifically $9.75. And so if we're able to continue to break over this little area of supply, then we should be able to hit this $10 whole number level, which is also the neckline of this double bottom. So this there's layers to this, guys, right? Now, I also love the fact that we were able to close over the weekly 10 and the weekly 21 SMAs, which is great always, because that means we were able to retest the next SMA. And what would that be? Well, if you take a look at the top here, we have this massive weekly 50 SMA continuously declining to catch up to the price. And so if we're able to continue to hold over the weekly 10 and weekly 21 SMAs, we should see a nice uptrend move back to the weekly 50 SMA for our first retest at this huge SMA on the weekly time frame. All right. Now, before I delve in further, okay, let's take a look at the daily time frame. So what's interesting about the daily time frame is that on the RSI, okay, we've been making lower highs and lower lows, all right? And if you take a look at this double bottom here, or the left bottom and the right bottom, or the first and the second bottom here, as seen by these two arrows, we have made lower lows. The second bottom is a lower low compared to the first bottom. And during this time, the relative strength index, or the RSI, has actually made a higher low, right? So what we have here is what we tend to call a hidden bullish divergence. So we have a descending support trend line on the price, while we have an ascending support trend line on the actual indicator. And that usually indicates some very, very good bullish strength. Hence the reason why we're able to see a continuous drive up higher on this specific ticker, and the potential for this name to actually break over this macro descending resistance trend line. All right. And so to top all this off, we were able to see a bullish crossover last week on the daily 10 SMA, crossing over its daily 21 SMA counterpart. And ultimately, we were able to see a breakout over the daily 50 SMA, this dark blue line. And we continue to move up higher on Friday, continuously seeing some very good bidding of the price on this ticker. And if we're able to see a move tomorrow to $10, I would obviously expect to see and assume that we'll see an immediate rejection first and then a nice pullback. Now, here is where that pullback becomes important, because that is where we can see a potential entry point at $9.30. This is the reason why I gave you guys this entry point. Long bounce at 9.30. And if we're able to see a rejection at 10 and come back down to around this 9.30 area, which also is a daily level of previous resistance, we can see a new support being made at this $9.30 level. All right, and that will also give enough time for the daily 10 SMA to catch up, along with the trailing and close behind daily 21 SMA. All right, so there's a lot of bullish indications on this specific ticker, and based on the contracts that we've chosen for the option contracts on this name, we can potentially see some very good triple-digit returns. All right, and last but not least, let's take a look at Adobe, ADBE. So if you guys remember, I gave everyone a long-term investment idea of Adobe at 474.50 to 475. And look where it has gone since then. Remember, that was back in, I would say late September. Yeah, it was exactly late September of 2022. So this one has made an amazing run. And I expect it to continue to move up higher. But before I start to talk about something else, let's talk about the current swing trade idea that I have for this name, or potential day trade idea. So first of all, on the weekly time frame, we have a huge inflection point on Adobe, except this inflection point is not a potential resistance. In fact, it's a heavy area of support, not just a level, it's a heavy area of support. Why? Because the weekly 200 SMA has finally been retested, and the weekly 200 SMA has finally caught up to the price after the price had broken over it during that initial impulsive move up back in around mid 2023, right? And this is the first retest since then. I would say this is, I think this is literally the anniversary of this weekly 200 SMA. And so last week at this weekly 200 SMA, we were able to retake it and close over this specific large SMA, because in the past 2 to 3 weeks, we had continuously moved lower and closed below this weekly 200 SMA. However, I love the fact that in these 3 weeks, or just in these 2 weeks here, we saw declining volume, which means that selling had stopped, or the short sellers had taken profits at this specific weekly 200 SMA area. And that allows the buyers to come in, or especially the long-term investors, to start DCA, to dollar cost average, into this specific name. And we want to be a part of that, but for a shorter term perspective. And based on last week's candlestick alone, this this hammer candlestick, which is a nice reversal candlestick, right, gives us a potential for a continuation weekly candlestick to be made this week. And so what I want to see is a retest, an official retest of the weekly declining 10 SMA, my red line here. And if we do see a retest this week, which I would love to see ideally, that will be our first retest after we got our initial retest of the daily 10 and even the daily 21 SMA. And so this will be our official second retest of this daily 10, which could potentially allow us to even break over the weekly 10 SMA if we were to extend this potential ideal reversal to the upside, and we'll be hitting the next major level of resistance sitting at 516.50. And ultimately, if we do see this retest of 516.50, I would expect to see this weekly 21 SMA nearly caught up to the price and sitting right over, or at least hovering over, this 516.50 level. All right, so this is a very conservative outlook on Adobe if we do see a weekly reversal back to the upside. But again, you guys have to remember that Adobe moves a lot whenever it finds a nice trend to follow. And so I am just keeping a very conservative outlook with my targets. It can definitely move a lot more if it decides to extend my current outlook on this name to the upside and break over this 516.50 level, and even just simply retest my daily 50 SMA, which is now hovering over the price action of the candlesticks here, and ultimately even retest maybe even 539, which is my next level of resistance. Okay, but let's not get there. Let's not go off topic here. But on the daily time frame now, okay, so with that being said, on the longer term perspective, Adobe on the daily time frame looks really interesting as well, because first of all, we broke over this daily resistance level at 479.20, and this is crucial that we were able to break over this resistance level. Why? Because in the past couple of weeks, for many weeks actually, or maybe even almost the entire month of April, we were literally tightening up underneath this 479.20 resistance level, and we were able to finally break over it. And on Friday, we actually ended up with another hammer candlestick on the daily time frame. And so with this tight tension broken to the upside, that allows the daily 10 SMA to slowly catch up to the price to ultimately support the way up higher, and at the same time to see a nice crossover over this daily 21 SMA. So it will officially create an official bullish crossover, right? I'm repeating my words here to make sure that you guys understand the importance of this crossover. Now, if I bring up the RSI, again, there is a recurring theme here, as we saw with WB, ticker symbol WB. So as we are making lower highs and lower lows, the RSI actually continued to make similar and same lows. But in the most recent price action, as we're making lower lows, even if we were tightening up underneath this 479.20 resistance level, or again, if you guys just want to round down to the whole number level, 479, you guys can do that. That's your cup of tea. We saw lower lows, but the RSI saw higher lows. So again, we're seeing this descending support trend line on the price action, but we're seeing an ascending support trend line on the indicator itself. So what we have here is, again, a hidden bullish divergence on the RSI relative to the price action. And that gives us even more confirmation that we should be expecting a short-term or even just a short to mid-term reversal back to the upside. Now, again, this bullish crossover on the daily 10 and daily 21 SMA will further that confirmed breakout and reversal to the upside. Right? Now, on the daily time frame, I simply want the first retest of $500. This significant triple-digit number of 500. This is a psychological number, so I will be expecting to see a lot of selling to come in at this level, and at the same time, I would expect the daily 50 SMA, which is also slowly creeping down and declining here to catch up to the price, to be hovering over this $500 psychological level, and eventually see the price maybe even pop over 500 to officially retest this daily 50 SMA. Okay, and again, if you want to extend this uptrend, if this stock wants to extend the uptrend, and if the market allows it to, we can see an ultimate retest of 516.50 as I've explained on the weekly time frame. All right. Okay, so that is it for this video. If this technical analysis video was insightful, make sure you guys leave a like down below. And if you aren't subscribed yet, make sure you guys hit that subscribe button as well. Good luck, and I'll see you all tomorrow morning.